All right, ready? I think we're ready. Let's get right into it. Inducement type 1. Go ahead and draw this out exactly in 5 seconds, 10 seconds. I'm going to start explaining it. In an uptrend, inducement type 1. This is inducing traders and seeing a new trend. So if you've seen your BOS, right? When you see a BOS, we need to understand in an uptrend, where's everyone's stop loss is going to be below. If you're buying right here, you want price to go higher, where's your stop loss at? Your stop loss is going to be below a higher low. Your stop loss is going to be below a higher low. Damn, I don't know, I can't draw it. Stop losses are below a higher low, everybody. So if your stop losses are below a higher low, you need to understand that we look to buy below higher lows. If this is your structure, oh, high, higher low, higher high, do not be looking right there. You want to be looking below. So we look to buy below higher lows. Why? From the eyes of retail traders, when they see a low broken, oh, that's a BOS, right? Newsflash, it's not a BOS. A BOS is what's inducing you to see a reversal. So this is called a reversal trade for retail or SMC traders. Buy below a higher low, or sell, you see a BOS, then you're gonna sell at a lower high. This is not a reversal. This is what we call a continuation inducement. It's an inducement to induce people to see a reversal trade, but we are looking at it for a continuation. So when you're in an uptrend, you identify the higher low, and we look to simply buy below the higher low with the order block to the immediate left below that. So specifically in this case, market makers inject early fear of reversal into those holding buys. So if you're in buys all the way down here and you see a BOS, you're like, shit, the market's going to reverse. Oh my God, I can't do this. That's what these buyers are being induced into feeling, fear of reversal. For those who are looking for sells, this reaction gives hope to those of catching a new trend. Sells, oh, here's a BOS, here's my order block, boom. So guess what ends up happening? Both of these types of traders are going to be wrong. You see here, oh, here's my demand, it's gonna get stopped out. You think, oh, I'm thinking about a supply now. I'm looking for my supply because I have my BOS right here. It's not gonna work. So you're getting trapped both ways in the market. And that's what inducement is. Specifically, it's not letting me annotate, which is very frustrating because I need to for this, but specifically, you're gonna have an order block over here that price mitigates for this reaction to happen. This reaction happens for an inducement when the wrong order block to the left is mitigated. If you're reacting to not the correct order block in SMT, a smart money trap, which you guys will be learning about tomorrow, this is the move you can expect. People are like, oh, an order block's mitigated. Oh, I have a break of structure and I'm going to look here at the supply. That is not the case. If this is a wrong order block, you can expect price to focus on the buy continuations. So this is for the buys. Can I draw this? Now let's look at the sells, everybody. Inducing into a new trend. All right, so we're all good on this. We should all have clarity on this now. I'm just going to hide this. Now let's look to the right. Let's talk about the sells now. The sells, right? The sells are what's the same thing as the buys, right? Sells are going to be the same as the buys, but in a downtrend. So when you're in a downtrend, right, you have a lower high, lower low, lower high, lower low. We need to know we're going to be looking for sells above lower highs, right? So in here, you have your last little trading range from this lower high to this lower low. We know that every SMC trader is going to be looking, oh, here's my order block. Here's my supply order block right here. That's following structure. Low, lower highs, expecting lower low. How can they be trapped into the wrong direction? Well, when you see this a BOS, how many times would you be like, oh, damn, this isn't the right order block. So now I guess we're going to be looking for buys. This is a BOS. Well, you're induced into seeing buys because of the wrong direction. Inducement is just a false structural break that makes you think from a retail perspective, something new is or the same is going to happen. In type 1 example, you see, oh, a low broke a lower high. Now we're going to be looking for buys. Again, that is not the instance. When this low over here, when it mitigates an order block that is not relevant, and you see something like this happen, think, I know because this order block is not going to cause absolute new highs, it's just going to cause an internal inducement to then cause price to go lower. Again, it's a confusing concept. You're not going to get it right out of the bat, but over time, the practice, you're going to pick up on it, lickety split, right? So this is that sell inducement, and that's the one over here. This occurs after a false reaction from a counter order block. So the market makers inject early fear of reversal to those holding sells and are giving hope to early buyers of catching a new trend. BOS, oops, I'm going to be looking off my order block here, and then you're just completely on the wrong side of the market. This is why we do not trade structure. We trade structural breaks. And that is what inducement is. Think about it. We trade structural break to structural break. And making that little perspective switch initially is a little difficult, but we're going to spend a lot of time on that throughout the bootcamp, right? So everyone type 1 in the chat if you are ready to continue. Perfect. All right, let's go to the next. Let's view it. So what's the retail POV of these different types of inducement patterns, right? Inducement patterns. Breakout traders, right? We just hinted at it. Very, very notorious, right? This is why breakout traders are always losing. Breakout traders, they see a high, a higher low, a higher high. When this low is broken, they think, wow, the trend's going to reverse. I'm just going to keep selling my position all the way lower. So they have their sell stops below low, anticipating new lower lows. So when they're getting triggered in at this point, they're hopeful. Yes, hell yeah, like this is going to keep continuing. This is end all be all, right? But then what happens? We know they're going to be triggered, and then what's going to happen based off that inducement type? Boom, they're going to lose their position after barely getting tagged in. So breakout traders, they're losing right here. So it's the next type of liquidity, right? You have your support and resistance, beautiful, right? Your support and resistance. Why are support and resistance traders losing? Equal highs, equal lows. Well, we already know. Well, this has maybe one touch. This is my, support. Oop, I have my support here to go higher. We know this does not happen because where are their stop losses? Their stop losses are below the lows. So we need to collect their stops in order to go higher. Collecting the gas to go anywhere, right? That's always needed. That's why support resistance does not work, as we should all know by now. Let's view now over here. Break and retest, break and retest. Why does break and retest not work? Or when it does, in no specific case, right? They expect, oh, we have, bullish structure. Low is broken. Beautiful. After low is broken, I'm going to expect to retest this area, right? Sell in the retest, and then they want to go lower. When in fact, we know that's not the case. We know a couple instances, right, can happen, but for the sake of argument, price can just completely take them out, which was that third type of reaction from a break and retest. But wait, there's more, right? There's more traders who are getting stopped out. SMC. What does SMC see? Oh my God, I have a break of structure. I'm now going to anticipate price to come all the way up here to our order block, and then price is going to reverse. Well, you're induced into seeing the wrong direction. All these traders are getting the direction either completely wrong or they're initially right, but they get stopped out before the trade actually goes in their anticipated direction. So that's why all these traders are going to end up losing based just off this one type of inducement, right? And again, these are SMC traders. They see a POS and assume there's a reversal, when in reality, it is just money being collected to push price higher. Years ago, 2.5 years ago, 3 years ago, when I really started getting into SMC, BOS was only an intent for price to reverse. It does not have to. So we need to always think about buying below or selling above structural points. Why did I mark out structure? Because structure is the most manipulated form of liquidity. All these retail strategies that we're going through right now, notice they always require structure for their strategy. Doesn't matter if you break out, structure, SNR requires structure to tell you where price is going. Structure. Structure is not king. Structure is going to cause many people to lose all over the place. Sure, it can help you be on a grand scheme, right, the right direction of the trend, but you're gonna get trapped in so many different little areas all along the way. So inducement is the key that tells us where multiple different types of trading strategies and traders are losing, ensuring with a specific edge, we're the only trader that's going to be profitable in this scenario. So let's go over a quick video and we're going to watch how the type of application works. About inducement type 1. So as mentioned, we look to sell above lower highs and buy below higher lows. And this is what we refer to as our false break of structure, meaning, we don't look at structure, we look at inducement. And all inducement is structure, all structure is inducement, meaning we don't actually trade structure as liquidity traders. We trade structural breaks. We trade when everyone has their stop loss. And where does everyone have their stop loss? Well, at structure, right? Because they believe that's where structure, structure breaks, it's completely bound. Well, that's just a necessary evil that has to happen in order for price to go where it needs to go. So now with that being said, let's apply what we've learned so far. So when we're thinking about the inducement type 1, specifically as pertains to a buy example, we know that we look to buy below the higher lows. So generally, it should be looking something like this in the diagram sense. We're going to have to be faced with some form of low, high, higher low, higher high, some form of uptrend. And then we're going to look for price to aggressively take out this higher low in order to go higher. So just at initial glance, initial application, what do we see kind of going on over here to the right? Well, what I'm seeing in my mind, and again, the only reason I would be marking structures to show you and help make sense of the inducement, but we clearly see that we have some form of low that was aggressively taken, right? So we had a low, we had a lower high, now we have a lower low. Well, now this low, right, this previous lower low has now made a new high. So this now is showing us some form of, again, bullish structure. We do not trade structure, but it gives you a conception, understand this is how we should be thinking about it. So now let's go ahead and let's keep going. Now we have a new high, right? Now we have a new low. Now we have a higher high. Now we have a higher low. Now we have a higher high. And we don't have, this isn't a higher low because it has not yet made a higher high. So right now, what we're looking. Based on this, everybody, can anyone tell me, based per our type 1 inducement, where our inducement is? Remember that little diagram we drew, the last higher low that makes the last higher high, right? So let's see. Yeah, his price has looked something like this. You know, new high, higher low, higher high, higher low, higher high. Based off of that inducement type 1, where do we look to buy below? Well, we initially need to be buying below higher low. So where's the higher low in this case? It's right here. Where's the higher low over here? It's right here. So this is going to be the higher low that we're going to be buying below. Now what we need to do, we need to find an order block below this higher low that has imbalance, that took out some form of liquidity, that mitigated some form of order flow. And then simply all we do is we expect price to aggressively, right, break this low and then come much higher. So let's see if there's anything over here to the left that would tell us or give us any insight as to, that'd be the right option. So let's go ahead and let's zoom in here. Do we see an order block below this low? Well, there was an order block, but notice it was already mitigated. So this isn't right. Do we have anything else? Oh, yes, we do, right? If you can ever slightly tell, we do have an imbalance. This candle right here, this last candle, if you can see, there is the gap right before it, but the gap was never fully accounted for. So this is actually going to be the order block that we're going to be looking at. And remember those 4 features that we have discussed in day 1 of those day 1 recordings. What did it do? Well, this order block liquidated the previous candle low, and this can kind of tell us, utilizing our intuition, that some form of order flow is being mitigated as we had something in this way, there's order block, price came to mitigate it, and then this is where price was just randomly left. Especially because now during this specific day and time, we have FOMC, price has a very pertaneous reason for just to absolutely sell off, come here, and then what are we going to expect? Well, the exact same. After we take out a low, we look to make a new high. So that being said, this is going to become our first initial target, and our risk reward on this trade would look something like this. Let's see. The stop loss, of course, is going to be immaculate. It's going to be 1.3 pips, and our first take profit at the least is going to be right a 1 to 23, which is great. But again, we are going to be looking to target much higher. But this is where we want to start using our intuition or understanding what inducement is as we go on. But this is what we would expect, and of course, we want to be targeting higher areas of liquidity as well. So new highs, new structural highs for price to run to. So this would be the first take profit because this is the initial higher high, and then our second take profit would actually be this high over here because this is we always target new highs. So this now becomes a 1 to 53, and let's see what price did. All right, so price has now effectively entered our position. TP1 smash 1 to 23, and then absolutely just ran away. So that's a 1 to 53 breakdown in just less than a couple minutes. But now let's switch it up a little bit. Let's go ahead and let's look at sells. So if we go to GBP USD, I want us to drive our attention right over here. Again, and we can do this together. When we're looking at price over here, type inducement type 1, we look to buy below higher lows and sell above lower highs. When we're looking at price over here, this might not make sense to a lot of traders. We're allowed to move, oh, which is price, or it's just choppy. There's always sense behind it, but we have to be able to make sense of what's actually going on. So let's see what price is doing. We have some form of high over here. We then have just a random low, but we need to build a story around current price action. So let's see where this low is broken in the future. Great. So this low is broken over here. So now what are we going to be doing? Well, this is now the absolute high that caused this low to be broken. So this just would become the next structural point, right? That we're going to be looking to sell above. I'm viewing this, just so everyone knows, I'm viewing this as the overall low, the overall high, but from multi-time frame structural analysis, you're always going to have some form of internal structure as well. So internally, you're going to be able to see that we have some form of internal low, internal lower high. This is an internal lower high because this is the absolute high that makes a lower low. So this from here is a trading range for sells. So if you're viewing it from a range, you have a high, a low, a lower high, and a lower low. And this is where we want to be selling above. Yes, it's equal highs. Yes, there's a whole trend line that comes into play as well. But this is why I'm looking to sell above this, because for sells, remember, we look to sell above lower highs that make some form of lower low. So this is our inducement right there. And for sells, remember, what do? We look to sell above lower highs. So if we have a high over here, we have a high over here, we have a low. We have a lower high because this is the absolute highest point before breaking this low over here. So we have a lower high, lower low, and it looks exactly like we have illustrated over here. Lower high, lower low, lower high, lower low. So now we have that solidified. The last thing to do is ask yourself, do we see an order block above this lower high? Well, yes, we see this order block right here. So that's going to become our area of refinement because we're going to be selling above a lower high. That's going to require to be liquidated, taking out stop losses. We have imbalance, we have liquidity being swept, even if it's just fractal candles, that's still liquidity being swept. And now what we're doing is we're going to be looking to set a pending limit order here, or you can obviously manually execute as well. And then we're going to expect price to liquidate this lower high and then just keep going lower. So with that being said, if this is going to be our preliminary entry, and we are going to be utilizing our stop loss, this is an 11 pip stop loss, of course, but we can actually go ahead and refine this a little bit. Maybe we're wanting to go down to a lower time frame, but that would be for another video. So now after, of course, we look to again sells here, then we just go ahead and simply target right at least this low. But notice, right, there's no imbalance. This imbalance has already been mitigated. So really, we're going to be targeting new lows. And then better yet, there could be something way over to the left that could tell us price could go even lower. And of course, this is actually one of our swing plays that we did. As price now, it needs to come all the way down for another reason. But now that being said, we're going to go ahead and set our target. We now have our pending. We have our pending order. Oops, we have our pending order, and let's see exactly what price is going to do. Now notice it misses, right? But then guess what? It comes right back into it. And what do we expect price to do? Just absolutely sell off. Just go all the way to the ground to our take profit all the way lower. All right. All right, everyone. So that is our example for our type 1 inducement. Now what we're going to be going through is a few applied examples based off of what we just learned. Again, it might be initially confusing, but I promise over time you're going to have a very clear understanding to what price needs to do. So like we just went through with the previous, we're just going to practice, okay? So what I want you guys to identify first is where are we trending in this instance? Everyone identify where we are trending. And let's all stay on the same track too. Awesome. So we know that we're trending higher. Beautiful. The next thing I want you guys to identify is now, if we're trending higher, where do we look to buy? What is our inducement? What's going to induce traders in the opposite direction? Boom. Juma got right. Awesome, everyone. Awesome, right? Great. And then, of course, the order block line after you guys have identified it. So it's going to look like this. For structure, we know that we have our, we have our high, higher low, higher high, higher low. Don't get ever caught in this. Oh, so order block. No, there's no liquidity for it. No, right? Especially, here's a whole trend line too. Oh, it's not going to work. Very many reasons why it won't work, right? So now you've identified your inducement, which you need to master structure before you can understand inducements, because if you don't know structure points, you're not going to know the right inducements, right? So after you've identified the inducement, where's the order block? Of course, our order block is right here, just thereafter. And then what do we expect? The target, we expect it to look exactly like the diagram, breaking a higher low to then make a new higher high. It'll look exactly like this, of course, with other entry refinements. Great. So that should start to make a little bit more sense now, but still very surface level. So now what we're going to do is the exact same thing, but in the opposite direction. Go ahead and guys identify trend. Mark the structure points in this case. Everyone identify the structure points rather than the trend itself. Everyone, do it together. Awesome, right? Awesome. So now let's see. Structure point wise, remember, you're going to have the structure itself is something spent a lot of time on. We already have one video up in the community. I put that on pause for the complex because structure, it gets very, very analytical. There's multi-time frame structure that's important because as we go through different types of inducements, you're going to realize why. But as far as the most obvious, right, we have some form of high, low. We have a pullback, and then it makes a new overall low. Is this structure? Yes, but this is all just structure inside of our main leg. That's internal structure because we learned about that, right? So this is that current structure that we're identifying. So where do you want to sell above? Where's the inducement as you guys have already identified? It is right here. This is our inducement. We look to sell above this high. More so because guess what? There's no order blocks over here that are left unmitigated. This order block has been mitigated. This is done. This is mitigated, right? Just caused a small reaction. We also have a trend line over here. We know that a trend line can get taken out, but there's no order block. So guess what? None of that is valid, right? So now that leaves one area for an order block. And everybody, where's the order block then? Right? Boom, just above. You have all these equal highs over here. Imbalance takes out liquidity, mitigates a previous order block, indicating order flow. And then that's where we are going to look to take our position. Order blocks that lie to inducements don't work ever. This will not work because it's also lying equal highs. It won't work. We want to sell above lower highs, right? Above lower highs. This lies at liquidity. It's not going to work because we have all this over here as well. Just to trap a fake order block and a smart money trap again tomorrow. So then all that's have to do, take out a lower high, target a lower low, and then boom, right? So on and so forth. Oops, let me see here, y'all. 1 second, I gotta do this and clear. I keep pausing it because some of these annotations are messing up. Over here. All right, so this is the last thing you guys are going to identify right here. Based on what we have current access to, where are we trending generally? Up or down? So we're trending down, right? Boom, we can see we're making some form of lower highs. So we're trending down, awesome. Now we want to identify now, if we're in a bearish trend, identify the lower high we want to be selling above. You know what, this drawing actually cut off, but let's see. I think this was an error not over here where I drew the stocks, but let's just see, right? Let's just see. Clear all this. Beautiful, you guys identified it correctly, right? Awesome. A little tricky, right? But we see that we have what? We have a lower high right over here. We have a lower high. We see some form of structure break, lower low. We see a lower high, structure break. We see a lower low. What do we look to sell above? We look to sell above lower highs. Well, where's our order block above this lower high that makes, right, this lower low? Where's our order block? Order block is right here, remains unmitigated, and boom, easy as that, right? Easy as that. Take out a high, and then where you expect new lows. But guess what? Is there any imbalance? Nope, and that's something we'll be learning on day 3. Now we know that we can target all the way down here. So this is inducement, but guess what? There's more. We don't just stop here. You're gonna be learning how to catch this. You're gonna learn all that, right? So it's still tip of the iceberg as Antoine said. But that's exactly how we approach the charts. One setup for one inducement. Lovely. All right. Now we're going to the second type of inducement for today. Go through a couple examples, and then we are going to end off the day with a plan. All right.